Tonight, it is expanding its short-selling investigation. Hedge fund managers will have to certify their positions under oath, and the exchange's regulatory arms could conduct raids on short sellers' offices. So, Mark, the war is just beginning.
All right. Scott, you stay right there. We're going to bring in Bob Pisani now, and a guy who thinks the SEC did the right thing by banning the shorts from financials. Thomas Gorman is a former SEC attorney, currently chair of the Porter Wright SEC Litigation Group. Good morning, sir. Thanks. Good evening. I'm sorry. I'm used to being on in the morning. Thank you very much for being with us. Let me ask you this. I mean, isn't it totally unkosher to change the rules in the middle of the game?
It can be totally unkosher to change the rules in the middle of the game, but not in this instance. What the SEC is reacting to here is the market turmoil and the incredible volatility that's been in these markets over the last several days. What you've seen in these markets is huge price swings, and you can very quickly see price swings going up, you can see price swings going down, and what the SEC is trying to do here is protect shareholder values. So what they've done is they've placed here an emergency measure, very short term. They've stepped into the markets and they've said, we're going to level the playing field, we're going to calm everybody down, we're going to expand our enforcement investigations, and we're going to make sure that there's no fraud here so that we can protect the values for the shareholders.
Excuse me. If there's fraud, prosecute it. You know, don't ban short selling just because there might be, I mean, there's fraud on the long side too, so you don't limit the long side. Let me ask you something. Why don't they just put back the uptick rule?
They could put back the uptick rule, but that's not going to solve the problem today. The uptick rule, as you know, came in the 30s. It worked well for a long time. Whether we need it
69 years it worked well.
Whether we need it today or tomorrow is a question for another day, but it's not sufficient to quell the markets in these extraordinary times. The uptick rule is something for the everyday trading. What we're seeing here is not everyday trading. When you've got 450 points up one day, 400 plus points down another day.
So we need one set of rules for quote normal and another set of rules for quote extraordinary, and who decides which is which? You want to go down that road?
No. What we need here is a circuit breaker. What we need here is for everybody to sit back, take a deep breath, and say, what's going on? And that's exactly what they're doing. This is a very short-term rule.
Let's get Bob Pisani in here.
Yeah, short selling adds liquidity. I think everybody agrees on that. Here's the problem. We had the mother of all short covering rallies here today. As a result, traders down here don't believe the prices right now. So we've got the next few weeks where nobody, the other side is essentially not there at this point. Now, you can still short the overall market, but not being able to short financials after October 3rd, what happens? Do you think that they're not going to extend this into the elections? Do you think they're going to sit there October 3rd to November 2nd during the elections? They're going to probably extend it. Now we're going to have more uncertainty. You need it for the liquidity, and you need it to find some kind of fair price.
And here's the other problem, and this is what the shorts will point to, and shorts who are doing this legitimately. So we're going to eliminate volatility now, but what happens when eventually the ban comes off? And remember, the UK has their ban in effect until January. You think maybe the U.S. will follow suit. They point to what happened to Lehman. Remember that there was a ban on naked short selling that went into effect in July. It came off in the middle of August, and that's when the stock went off the cliff. And they say that that's going to happen with everybody else when everybody jumps in when this thing comes off.
If they don't have an uptick rule. Yeah.
Well, the uptick, again, the uptick rule is something that works in ordinary times. This is not an ordinary time. I don't think anybody would argue that these are ordinary times. Taking the shorts out of the market for a very brief period of time is not going to terminate the liquidity, but what it will do is it's going to allow people to take a breath and see what's going on here, which is all they really want to do. Otherwise, I would agree, long term, you can't have this kind of market intervention because long term, it could interfere with price discovery. But in the short term, the incredible volatility is clouding all the price discovery, and that's what these markets are about.
Why are the shorts there? The shorts are there because there's something wrong with the system right now. Now they're trying to right the system. Secretary Paulson's got a plan. The best way to deal with the shorts is let the plan work, and then the shorts are going to become longs. That's what's going to happen.
Exactly.
They're not there. They're looking to make money. If they think they can make money on the long side, they're going to turn very, very quickly.
They're the only ones out there that have to eventually buy the stock.
In the short term, or excuse me, in the long term, that's exactly right. But in the short terms, a lot of short selling, a lot of computerized trading can push the prices of stock down, way down below where they should be. They can basically cause a death spiral for some of these companies. And if that happens, what's going to happen is Main Street, mom and pop who have all of their money in their 401k and these bank stocks are going to lose all of their money, not because the value's not there, but because the trading got out of control. And that's what this is about. It's protecting those shareholders.
Well, doesn't that assume that everyone that's short is doing it fraudulently? Maybe they have legitimate reasons that they want to short these stocks. And again, as we said at the outset, the government has taken sides here. The government has sided with the longs, but maybe these very rational players, unless you assume they're all fraudulent,
the most rational players.
Yeah, right. Maybe they have a point.
Why aren't we investigating longs who are manipulating the market too? By the way, didn't see any of that in the SEC. Why aren't we having symmetry in our investigations?
Well, I think the SEC investigations are expanding to look at market manipulation, period, whether it's on the short side or whether it's on the long side. And it's critical that they do that. But the problem with investigations is they take time. The problem with enforcement is that it's after the fact. It's not going to save shareholder value from out-of-control trading. And what you've seen in these markets over the short term is out-of-control trading. And that's really all that's going on here.
They're never this aggressive on the way up.
You know what? I'm sorry, but I'm going to have to disagree with your characterization of out-of-control trading. It was 400 points, 500 points. That was what, 4.5%? The crash was 23%. We've had days that were 10 and 11 and 12%. This was only 4 or 4.5%. I'll grant you that's a lot of money. And it looks scary when it's 500 points on the Dow. But we are, after all, over 10,000. And 4%, yeah, that's volatile, but it's not scary volatile like 10%.
It's scary if you own shares in an investment bank.
Yeah.
I think it's scary if you own shares in stocks. I think it's scary if you're out there and you've got your money in bank stocks and your 401k and you're looking at these banks that have toxic assets on their balance sheets, and the government hasn't stepped in with its plan to fix those yet. And in the short term, the traders, as you know, can trade those shares down to nothing, even though the real book value of those companies is worth way more.
All right. I would urge people to go back. If they can find a database, a day-to-day database, you're going to find that the market has, in fact, been much more volatile in the past than it has been lately. I'm not saying 4.5% isn't a lot, but we've had this before. Tom, thank you very much. You stood your ground in the face of a hostile crowd. We appreciate your time. And Scott and Bob as well. A very brief note here from me.
Thank you.
It occurs to me some of you, evening time, may not know uptick rule. There used to be a rule you could not short a stock until it had traded on an uptick. And in other words, you couldn't pile on as the stock was going down. That's what the uptick rule prevented. It was done away with a year ago, and here we are. Next, what we can really expect from Washington this weekend. This is a CNBC special report. Crisis on Wall Street. Is your money safe?